Alright everyone, here we are with another video with Invest for tomorrow. And to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video, and to stay tuned on in for all the information we have to cover. I know it's a little long. We're going to talk about the S&P 500 index, what Federal Jerome Powell stated at the last meeting with the Federal Reserve and the reporters asking questions, and I took about 3 different reporters that I really liked their questions and they stood out to me. So we're going to talk about if we're in a market crash or correction, especially after this big pullback so far today, and if it could continue. Now, one thing I do want to share with you guys before we jump into everything this video entails, if you're interested in becoming part of a community of investors that are intelligent, smart, and all looking to learn and grow together to maximize profits and minimize losses, you can join us over at the Discord. The link is down below in the description. And this is one of the stocks that I mentioned this morning, guys. I mentioned this stock at 170. It hit a low here going into the pre-market, switching into the market hours. Hit a low here of 153, and it took off all the way up so far to a high of 240. So when you do the math, that's almost a whole entire dollar and almost about 50% return on that run. So anywhere between 5 to 50% is an opportunity you could have gained if you would have been watching this one with us. Now, that isn't the only one. There's 2 others that I mentioned, but this is one of the ones that a lot of investors took advantage of. And if you want to become part of that, you're more than welcome to join us. It's not financial advice, and I'm not a financial advisor. I just state what I'm watching and the opportunities that are presenting themselves every single morning. So if you want to become part of that, the tiers are filling up, and the link is down below. So here we are with the S&P 500 index, right? Falling. So I want you guys to see a video that actually I went ahead and I just made, and then I comment on it, and then we listen to what they're saying. So there's some key themes. Frothiness in the market, okay? Jerome Powell says that twice. He then also talks about bond purchases, and he gets asked about inflation and interest rates, and then he gets asked about why inflation might happen and interest rates are not going to raise, but what is he really going to do with bond purchases? Is he going to taper? Is he not? And what's the effect of not tapering or yes tapering? So very important stuff. And if you don't really understand this stuff, I really suggest doing your research and doing further due diligence on this, because just solely based off of my opinions and what I state in this video should not be your only source. You want to dig a little deeper to understand it and not get caught by surprise with what may happen because of these statements. Now, on May 12th or May 13th, I'm not sure. If anybody wants to correct me, you're more than welcome to. Is going to be a big day for the Federal Reserve actually to talk about CPI data, as well as they may announce if they're going to taper bond purchases or not. Okay, that's a possibility. So that's something that could be starting this effect. Okay, then another thing too, the overall market could be pulling back because a lot of the reopening plays are being unloaded. So definitely some things to watch. Maybe just a one-day thing. Could we be in a stock market crash or correction? We'll see. It has to be consistent. But if it jumps right back up tomorrow, then things can get a little more confusing. But if it's a continuous effect, we could be in the beginning of a stock market correction or crash. So stay tuned on in for all the information.
Things like GameStop, now Dogecoin. And it seems like there's interesting reach for yield in this market, to some extent also Archegos. So does the Fed see a relationship between low rates and easy policy to those things? And is there a financial stability concern from the Fed's perspective at this time?
Right. So we look at financial stability for us is really, we have a broad framework. So we don't just jump from one thing to another. I know many people just look at asset prices and they look at some of the things that are going on in the equity markets, which I think do reflect froth in the equity markets. But really, we try to stick to a framework for financial stability so we can talk about it the same way each time, and so we can be held accountable for it. So One of the areas is asset prices, and I would say some of the asset prices are high. You are seeing things in the capital markets that are a bit frothy. That's a fact. I won't say it has nothing to do with monetary policy.
So, Federal Reserve Chairman Powell, right? He just said the word frothy 2 times. I think he even says it one more time in this excerpt of this video, in this section. And frothy is a strong statement. Now, the market didn't really react to it, right? On the day that the Federal Reserve was speaking, it went up, it went down, and then we went up to newer highs moving forward. And it's taken a little bit for the market to react, right, to some of the things that were stated there, or some people just didn't notice, or the news is coming out, or there's the uncertainty because of CPI data coming out, as well as probably a little bit of tapering, right? Or maybe no tapering at all, right? With bond purchases, which is going to be talked about in just a moment. But this is very important. The fact that froth was used twice in the same statement.
But it has a tremendous amount to do with vaccination and reopening of the economy. That's really what has been moving markets a lot in the last few months, is this turn away from what was a pretty dark winter to now a much faster vaccination process and a faster reopening. So that's part of what's going on. The other things, though, leverage in the financial system. There was such a demand for.
So now in this next part, so he said froth in one single entire statement twice, and he was very confident as he was speaking. Now in these 2 other statements, you can see he was a little bit more put on the spot, shaken up, and he had to come through with a very valid statement to both of these questions. So let's go ahead and listen to them. This is a little bit more complicated to understand if you don't know how, tapering works on the market, or bond purchases work in correlation to the market. And we've been in a repo market for some time, and usually once that gets removed, the stock market does get a little shock and a little bit, like they say, right? Like they basically are saying, like, could the stock market, or just the market overall, the equities and assets, could they hold themselves up without basically, a training bicycle with the 2 training wheels? If you remove them, will they, the market or the assets and so forth, will they be able to just ride on 2 wheels instead of having training wheels holding them up? Because that's what, these asset purchases or bond purchases tend to do. They tend to help. And you'll hear in just a moment, like, how the question is worded and what Federal Reserve Chairman Jerome Powell states, because they literally tell him, well, is it because the bond purchases that we've been held up? I mean, let's listen to it together.
For selling treasuries.
Or lead to more normal economic conditions later this year. When do you see the economy being able to stand on its own feet, so to speak? And along those lines, with the fiscal spending and the accommodation you talked about with transitory inflation, does more spending need to be injected into the system, or would that affect that transitory nature of the inflation? Thank you.
When will the economy be able to stand on its own feet? I'm not sure what the exact nature of that question is.
Well, what I'm saying is when do you need to lower the amount of treasuries you're buying, sort of taper off a little bit? When can it stand without having that support from the monetary policy side, and then further the transitory?
Okay, sorry. So we've articulated our test for that, as you know, and that is just we'll continue asset purchases at this pace until we see substantial further progress, and we're going to communicate well in advance of any decision. We're going to let the public know that that's what we're thinking, and so there'll be a lot of warning and that kind of thing. But it's about substantial further progress toward our goals. That's really all it is. It doesn't have any external virus-related specific requirement. Although again, I do think the virus will need to continue to be controlled for us to achieve those economic goals. But it's really the economic goals. Now, your second question. Sorry, just say again. I didn't quite get that question.
Yeah, sure. With all the fiscal spending that's happened in the accommodation in it, does the system need more spending, either from the fiscal side or accommodation, or would more spending affect the transitory nature of the inflation and put those upward pressures on inflation long term?
So it's really up to Congress. We're not an advisor to Congress.
So he just basically asked them the question about inflation, where federal chairman, right, Jerome Powell, went ahead and stated, I'm going to allow inflation to do its thing, and if we need to taper it down, we have the tools and things to calm it down if necessary, right? But he believes it's going to be temporary and it should fade away, right? And that there's going to be a certain average moving forward. Now, he just got asked that, certain tapering and or spending too much, will it make inflation go up? And he just, Jerome Powell, Chairman Jerome Powell, just stated that's not something that we completely have control over on the spending that's happening, right? Fiscal spending, and that's something that Congress will have to handle. So there's a lot of things going on right now that federal Chairman Jerome Powell, even if he wants to fully have control, he doesn't. He only can do so much, and he is doing his best. He's not perfect. No one's perfect. But it's important to pay attention to that, because there might be some things that no matter how much he's saying that the Federal Reserve is going to go ahead and look out for everything, he won't have full control over everything if Congress and so forth is going all about fiscal spending like crazy, right? Now, if they have a plan on how to give back that fiscal spending, which is something that's going on right now, which is having to do with capital gains and stuff, it's going to affect the market overall no matter what. However it's coming back, however it's going out, that's a big thing. Then inflation we have to worry about, if it's going to really be temporary, or if it takes a little too long, Jerome Powell may have to raise rates sooner than he was thinking of raising rates, right? Like everybody says. But it's so important to pay attention to this moving forward. Now, it doesn't mean that the market is a terrible place. There's no opportunities. The opportunities are always in the market. You just have to be looking for them. But these things here can't catch you by surprise. And when they do happen, if there's downward pressures, you need to start paying attention to your high conviction stocks and the stocks you really believe in. And if you believed in them before, there should be no reason for you to believe in them less if anything fundamentally has not changed or the growth has not changed. So if the company's on the right path in the same location, all that fluctuation is not directly correlating to why you first believed in the stock. So that's why it's so important to do your due diligence, do your research, and understand the value of the stock, how many hype individuals are in it, right? Because you don't want hype individuals in the stocks you really like long term. You want a lot more institutional investors and stocks that are actually set to grow over time, year over year, when it comes to their numbers, right? You want to be able to look at their revenue, their net profit. You want to be in profitable companies. The only time you go ahead and don't pay attention to profits is when you are looking at stocks that have to do with the future and you're taking a stake in it and taking the risk, right? Acknowledging the risk because it's something not now, but if not future tense, right? You're taking a shot at the risk of something that may become very important or an innovative product that will impact the future and start building revenue once it becomes more of a norm rather than a taboo. And then those net profits start to reflect in the stock's price. I think it's so important for investors to understand that the real reflection of making a stock go up over time is revenue, net profit, and net profit going into the stock price, because it goes back to the shareholders. But stocks that are moving up and down with no revenue, no net profit, that is just technicals, and there's no reason to really find any value in those stocks, because it tends to be usually penny stocks and they're near worthless most of the time. But that's just my opinion, and everything I'm sharing here about federal chairman Jerome Powell is my opinion as well of what I saw, and I'm just showing some of the most important parts. Now, this gentleman here, which we're going to listen to now in just a moment, he actually goes ahead and he's a little bit more bold and direct. And he basically says, what's the difference? What's going to happen if we remove and taper the 120 billion of bond purchases? Like, is it because nobody else wants to buy them that you guys are buying them? What if we remove it? What happens? And look at Jerome Powell's statement. This is a very, very important statement.
You know, we don't weigh in on specific fiscal bills or proposals. That's really between elected parties. You know, basically fiscal policy is the province of people who stand for democratic election.
He's still talking about the question from the previous gentleman, but we're going to go to the next gentleman. This guy's pretty bold.
And we don't have a seat at that table. We don't seek a seat at that table. So that's really something for Congress and the administration to deal with.
Let me go back to Paul's question, the first question, and ask you whether, not whether you're thinking of tapering, but why you're not. We're seeing bank lending fall. The markets seem to be operating well. Are you afraid of a taper tantrum, or is it, as one money manager put it, if you get out of the markets, there aren't enough buyers for all of the Treasury debt, and so rates would have to go way up? Bottom line question is, what do we get for $120 billion a month that we couldn't get for less?
So it's really not more complicated than this. We articulated the substantial further progress test at our December meeting, and really for the next couple of months we're made relatively little progress toward our goals. And remember, substantial further progress from our December meeting. And then...
Now, before we keep listening, because the question just got asked, and he's about to answer the very bold question of what happens if we remove it or anything like that. But Jerome Powell just stated that we're really far from the meeting those tests that they talked about in December. So it'd be a very good idea, if you're coming across this video, to look up the December meeting and hear it out and see what was stated and what their plans were. But the most important thing is he's basically saying, like, you know, we haven't even gotten near anything we were thinking. So, you know, raising rates is not really on their mind. Maybe tapering isn't even on their mind. So this is all speculation right now and rumors. But just going off of how he was speaking, right, when it does come that inflation is up and then there has to be an interest rate hike or, you know, tapering on bond purchases or anything like that, the market will feel it. And it's almost like the market's reacting just in case already, right? Institutional investors and retail investors, just in case this really happens in the next meeting or the next several days, once it actually is stated closer to the middle of this month. I'm not sure if it's going to be May 12th, May 13th, somewhere around that time, in that week frame, that they're going to talk about CPI data. They're going to talk about if they're going to taper or not. So there's just a lot of variables right now, and the market is looking like it wants to go into a correction or crash. Inflation is really coming, yet the 10-year Treasury is pretty flat. It's not really spiking up or down. It's just kind of sitting sideways. But he did state that there's a lot to go, so it almost seems like the Federal Reserve is here to continue to support. But the way these reporters are asking the questions, we're putting him in the spot to say some things. And there's a part here where he almost wants to say when he was going to do it. And then he's like, when the tests are met. Watch. Just watch.
Vaccination started to get more widespread. The economy reopened. We got a really nice job report for March. It doesn't constitute substantial further progress. It's not close to substantial further progress. We're hopeful that we will see along this path a way to that goal, and we believe we will. Just as a question of when. And so when the time comes for us to talking about it, we'll do that. And but that time is not now. We're not that far. We've had one great jobs report. It's not enough. You know, we're going to act on actual data, not on a forecast, and we're just going to need to see more data. It's no more complicated than that.
Well, if you leave rates where they are, doesn't change anything. But does it change anything if you actually tapered a bit? If you spent less, would you still get the same effect on the economy?
If we bought less, you're very faint. So if someone has a volume, they turn it up. But if we bought less, no. I mean, I think the effect is proportional to the amount we buy. It's really part of.
So that was very important as well. So he basically said, okay, so you're not going to raise interest rates. We're going to allow inflation to do its thing. It may be temporary, right? And then he goes ahead and says, but what if you taper, which is what a lot of analysis and experts are expecting. They're expecting that there might be a taper, and that's not something that Federal Reserve Jerome Powell has stated to not do. He's been saying he's not going to raise interest rates. He's not going to worry about inflation because it's going to be temporary. We're going to get through it. But he has not really stated, I'm not going to stop tapering, or, we'll continue as needed. So we do these further tests. But one thing that he did ask was very true, because tapering might come before interest rate hikes. And he just said it. These were the exact words that Jerome Powell just said. And listen to them, because he's saying the correlation of tapering to the market watch.
Les, you're very faint. So if someone has volume, they turn it up. But if we bought less, no. I mean, I think the effect is proportional to the amount we buy.
So he just said it. The effect is proportional to the amount they buy. So if they buy less, there's a proportional effect to it. If they buy more, there's a proportional effect to it. Now, he doesn't say directly what is the proportional effect, but you can go ahead and play it in your mind and go ahead and do some further due diligence on how important this tapering is, and if it stops, what happens, and if it continues, what may happen. So I definitely recommend doing more research, doing your due diligence, and understanding what's going on right now in the market, because it's not like the market is terrible, the market is bad. If you don't have experience in the market for over 3-4 years, then you really want to dig deep so that you don't get caught by surprise, and that you at least understand what's going on, because opportunities are always presenting themselves, okay? There's two types of people, and that's the same thing with the market, okay? There's the person that sees a half full, a glass of water, and then there's the person that sees a half empty glass of water, right? So it's the same thing. When someone sees a stock red, they might see it half full or half empty. If somebody sees a stock green, they might see it half full, half empty. It's all about perspective. So red, green shouldn't be a big deal right now. If not, more about paying attention to what's going on and preparing yourself when these things do happen. So this is not financial advice. I'm not a financial advisor or anything like that. But I like digging deep into all this stuff. I've been in the market around for some time, and I just wanted to go ahead and put it out there. I know you guys like these videos when I do them. And I have never really done a full summarization here of Federal Reserve Jerome Powell speaking, the chairman. And I really like some of the questions that were asked, and I like his reaction, because he maintained composure. But in his words, you can see, or you can hear, right, the whole entire perspective that he really has without saying it. So he is in a stance where once the tapering is removed, he's aware that there is a correlation to it. It's proportional to it. But he's never said that that's something he's not willing to take away from the table. He's doing it for as long as he needs to, he says. He's also saying that we haven't met our goals, so maybe he's not going to remove it. This could be an overreaction just in case, or preparation from institutional investors and retail investors just in case. But he is all about letting inflation do its thing. If he needs to, he has the tools to go ahead. He's always said this, confident, and maintain a close eye on it, or some type of control over it if he can, to the best of his knowledge. And he's also stated that he does not plan on raising rates till 2023, 2024, sometime around that time, or the end of 2022, something like that. But that's not the case. These reporters asked the right questions, and he said that assets and equities right now are a little frothy. He said it twice. Then he gets asked about, could the economy hold itself up? He basically, answered that question pretty well. And then he got asked directly, to the point where, what does 120 billion of bond purchases really do for us? And if you remove it, will it have an effect? And he basically said it's proportional. And he's not telling you what the proportional means, but if there's less, it could mean something. And if there's more, it could mean something. So that's why I'm telling you guys, do your research, do your due diligence. And as always, guys, thank you guys so much for watching, and let's make some money.